Americans can rest assured that our banking system is safe. Your deposits are safe. Every American should feel confident that their deposits will be there if and when they need them. Second,
well, President Biden's message to Americans and the market amid a financial failure: do not panic tonight. The collapse of two banks have stirred fears of a broader upheaval.
Now regulators are taking steps to protect customer deposits and try to contain an epic implosion. We have team coverage tonight on what this means for you and your money. We start in Washington, D.C. with Karen Kafa and how we got here.
President Joe Biden trying to instill confidence in the American banking system after Silicon Valley Bank collapsed and Signature Bank was shut down by regulators, both within days of each other.
Americans can have confidence that the banking system is safe.
Biden said customers of the failed banks would have access to their money Monday. The funds coming from the Federal Deposit Insurance Fund, which banks pay into, and not from taxpayers. Biden also said investors took a knowing risk in the failed banks and would not be protected, and the bank's leaders fired. Silicon Valley Bank was little known to most Americans outside of the startup world before depositors hastily withdrew $42 billion last Thursday in a classic bank run amid anxiety about SVB's financial health. The Biden administration's plan was relief to customers like Stefan Kalb.
It's odd to think about it now, but just even a week ago, Silicon Valley Bank was the gold standard. We are expecting Silicon Valley Bank to be around.
On Sunday, New York state regulators seized Signature Bank, a big lender to the cryptocurrency industry. Fears of other regional banks on the brink are raising eyebrows about how they're regulated, with less stringent rules than those put in place for the major financial institutions after the 2008 financial crisis.
The problem is, because of those regulations, a lot of the business they were doing has migrated to the less regulated parts of the financial sector, which are now pretty big.
Meanwhile, the Securities and Exchange Commission said Monday it's on high alert for any misconduct amid the recent banking turmoil. In Washington, I'm Karen Kafa.
To iTeam 8 now, and the wide-reaching impact of the bank closures that could impact some of you right here in Indiana. iTeam 8's Cody Fisher spoke with a financial expert to find out if you need to be worried.
A finance professor at IU's Kelley School of Business tells me that we're not completely out of the danger zone with this situation. Right now, we don't know if banks here in Indiana were dabbling in the same type of investments that these other banks were.
It is certainly possible that in the future we see, in the next couple of weeks, we see other mid-sized banks have the same issue going forward.
Christoph Kleiner is a professor teaching finance at the Kelley School of Business. He told iTeam 8 the failed banks were flush with cash just a few years ago. They invested that money, but when inflation hit and interest rates rose, that caused the problem.
When there was kind of a sudden run on those banks and people wanted their cash out, these banks had to sell these treasuries at a loss. That prompted more runs, and eventually they weren't able to meet the demands of those depositors.
Kleiner says the root of this traces back to 2018 and the Economic Growth, Regulatory Relief, and Consumer Protection Act, which passed both the House and Senate with bipartisan support before being signed by President Trump. The law rolled back some regulations that were put in place after the financial crisis in 2008.
What happened in 2018, 2019, like you said, is that we saw kind of a rollback of certain provisions and specifically kind of how often these banks are checked on. If we would have had those provisions, it's likely that we would have kind of caught these issues earlier on, and we might have prevented these bank runs.
Congressman Andre Carson voted for that bill. He was in Indianapolis today at a youth job fair. He declined to comment on camera, but said in a statement, "I joined a large bipartisan majority to pass changes in 2018 to provide assistance to smaller financial institutions like credit unions and community banks that many of my constituents urged us to support." He went on to say, "I believe it's time to review and update those changes to bring the requirements closer in line to our original Dodd-Frank standards, which I was proud to vote to establish." Kleiner told iTeam 8 it's likely some businesses in Indiana had money in these failed banks, but we don't know for sure because a full list of companies impacted is not publicly available.
A number of large startups are in Indianapolis and other parts of Indiana, and so they might actually be customers of this bank. Now, I don't think it's a direct concern for them because the U.S. government has already said that all depositors will get their money back, but at least temporarily, it might be a concern for those companies to be able to match their payroll. let's say this coming week, until that money comes in.
The problem isn't just for businesses. Kleiner says banks in Indiana could also be at risk.
While it hasn't happened yet, there is a possibility that a small or medium-sized bank in Indiana could potentially close its doors because of what's going on.
It's certainly possible. I certainly don't want to speculate because this is exactly the concern of bank runs, right? If you, kind of focus on one bank and everyone gets concerned that bank is actually affected, even though they did nothing wrong and are completely solvent.
The finance professor at IU's Kelley School of Business tells me that Congress could possibly look to strengthen banking regulations again because of what's happening. Reporting in Indianapolis, Cody Fisher, Wish TV, ITV.